this morning we are switching or starting the rollover from the December contract to the March contract. The new contract is H, so in TradeStation, that's going to be ESH14. So I generally do not roll over to the next contract till either Friday afternoon or the following Monday. So if you need to adjust and you are trading the March contract, simply subtract 6.5 points from the critical zones, and you will be exactly where you need to be zone-wise. So let's jump into it this morning, first by taking a brief look at the zones. So we had a really wide range yesterday, and we normally don't have wide ranges except on days where we have long liquidation or range extension. And we definitely had a long liquidation yesterday, and it was as if there was no buyers below. And that's what happens when you get a quick, nasty market correction. However, if we look at the bigger picture, right, let's take a look at the volume profiles real quick. This here. What we're going to do is I want to switch over because TradeStation has managed to screw up their continuous contract. If you're looking at the continuous contract on TradeStation, they have messed tremendously. So I'm working off the actual December contract itself. Just a second here. Okay, let's see if we can get this over here one more time. I apologize. There we go. So this is the actual the continuous contract. This is the December contract. So yesterday we pointed out a couple of things. The thing critical that I was pointing out yesterday was this right here, where we stopped one timing, and we had this very similar chart pattern on NQ. And one of the things I was pointing out was we've really been having a hard time. If you look at the NQ chart, which if we have time we'll do so in a minute, but it's already 8:13, was that essentially NQ chart had looked like a series of up bars coming into this, like this, while ES has been having a difficult time even challenging its old high here. We never actually even top ticked it to challenge. We couldn't get up there, and so it looked sluggish. It was having a hard time staying up near the highs, and it wasn't advancing while NQ was advancing. So that plus the stopping of the one timing, which means we started penetrating the prior day's low, and that began 2 days ago. So that opened this up, and then the other key level that I pointed out yesterday was this 1796, 1798, right? And I said if we got below that, it opened the door for 1790, and then of course extended down 1780, 82 area. I didn't expect to get 1780, 82, but the market gives us nice surprises sometimes. The key point was yesterday that and again I want to stress it today, if you took good-sized rotations, meaning 6 points or more before you took a trade into proper trade location, meaning at the actual zones, right, you had profitable trades on almost every single zone as we traded lower, right? So looking at today, what will today look like? Well, one of the ways that we can determine that is look at prior long liquidations and also prior range extensions, since we don't have that many long liquidations. The last time we had a long liquidation was all the way back over here, okay? And we closed on the low, and then we proceeded to turn around the next day and open up. We tested slightly below the prior day's low, and then we trapped traders right out of the go, and they drove up all day long. Okay, now, I don't think this will happen in this type of scenario, but it can happen. What I think is more likely for today is that we open up, and this was it was a long extension. It was the opposite of long liquidation. If anything, it was short liquidation. But if you'll look the following day, right, we opened, and we did manage to close at the high of the day the following day. But if you look, it was more of a balanced day with the majority of the volume going off in the middle. And on days like that, the easiest places to trade are from the edges, right? And if we look at large, historically, if we look at large trading days, and we go back a little bit, let me see if I can pull that off for us here real quick. I don't know if we go back enough. But this will give us a good, just imagine this in the opposite, right? So we don't burn a lot of time. If you look at this day right here, this is very typical where we had a big move up, right? Followed by a day of somewhat a balance at the bottom. Here's another one where we had a big day up. The next day, we had a pretty equal balanced day, both high and low, right? And then certainly followed by a complete balanced day right here. So one of the scenarios I'm certainly looking for is balance. So let's go and look at what that might look like on the chart. Hold on one second here. Let's trash this. So it looks like we're set to open about 1781. Now, I made up this micro white zone. It just happened to coincide with this 1784. The range was so large, I actually needed 2 white zones. The first big key is going to be getting up above 1784, right? And for the long side to hold, obviously, we're going to have to hold gap fill. So there's a couple of scenarios that I would look for in setting up that trade. Okay, so let's say we open here at 1781.50. We're about 15 minutes away, right? So we open here, and my suspicion is out of the gate that we will come in and test yesterday's close and into the lows and possibly even go into Globex lows. I would expect responsive buyers at Globex lows the first time in. What I would be concerned about is how far a stretch I get. I want at least a 6-point stretch, and since we had such a strong liquidation, particularly in the morning, to make sure I don't get caught, I might actually want a 7 or 8 point stretch. I'll be watching the price action into this area, but I will not take this trade if it does not coincide with at least a 6-point stretch, okay? So the scenarios are this. We come in, we can test gap fill, bounce right off of it, and start driving higher. That would be that scenario like I showed you a couple of weeks ago where we had a long liquidation, and we drive up straight into 1795.50, 1793.50 white zone. If we get up into this 95.50, 93.50 area, I will definitely take a trade the first time in unless something extraordinary has happened. The only thing that would be extraordinary enough for me not to take that trade would be if there is a data point or random news to come out. Let's see if we have. I don't think we have anything this morning. The rollover has been giving me fits this morning because TradeStation had their continuous contract messed up and I had to go and fix it up. So at 9 a.m. we have business inventories. It's a moderate number. I wouldn't expect it to generate much of a move one way or the other by itself. And it looks like we're pretty empty on the balance of the day. I don't see anything that would move the market, the balance of the day, just based off of news, right? So 2 scenarios. We come in and test gap fill, reject, move up through the white zone. The first place I would look to short is on a good extension up into 1795, 1796 area, right up in here, right? And I would expect a rollover. And this would also be a good place to put on a swing trade if we get up here. I have my doubts about our ability to get up here. If we come down and we can get, again, a nice rotation up, even a smaller rotation, and I see it stall in the white zone, that would be the test of Globex highs at 1784. But this is a critical area from yesterday afternoon's trading. And if we reject here and we cannot get above, and we have already tested both the gap fill and or Globex lows, I would look for a move lower from there. As a matter of fact, the door to 1770, this area right here, looks highly probable at this point this morning. It's actually what I'm looking for today is moving to 1770. But, and this is the critical part, if you'll go back and look on your charts, right, the majority of down days, even in bear markets, right, this is what it looks like, the majority of down days. We open up, we either go straight into a down liquidation, we open up, we test into the prior day's range, reject, and then go into a long liquidation. But what tends to happen about midday or early afternoon is we get responsive buyers and short covers come in, and we tend to close either in the bottom third or halfway in, right? If you'll go back and look on the number of days that we actually closed on the low of the day, they're very few, and that's important in terms of considering what you're going to do strategy-wise, because what everyone wants to do is when we get, like we did yesterday afternoon where we're having straight sell-offs, everyone wants to get bearish there and they want to get aggressive. Exactly where yesterday afternoon, if you look, I placed a trade right close to the close, a very small trade, but at 1780, everyone was pointing out how much market at close orders there were, and that almost always backfires on traders who try to short that, and it ends up getting met with demand or supply from the major houses, and that's why that trade worked late in the afternoon. Is because short covers came in. It wasn't very strong, but it was good for somewhere between 2 and 3 points to the upside. The point of that being is you don't want to short into the hole even on a down day. The market will give us good rotations higher. If you're an aggressive trader, you want to look for a 6-point rotation higher before taking a trade. If you're a very conservative trader, you want at least a 10-point rotation, and you want location at the zone. Very key. Now, you got to remember the strategy that I'm coming from. I'm not trying to capture every single trade out there. I'm only trying to capture the highest odds trades, meaning I'm trying to keep my win rate above 70%, preferably above 80% of all the trades I take. So I leave the mediocre trades off the table because my objective is simply to capture that 2 points. If I get more, it's gravy. Capture 2 points and be able to produce 1 to 2 trades a day, 2 points apiece, and consistently increase my contract size. So there's a lot of trades that I won't take or I don't take that other traders out there are taking, but their objective is to simply capture as many trades as they can using a moderate size of volume. I'm a concentrated trader using a large amount of leverage, and so my trades have to have a very high win rate and a very high consistency day in, day out. So keep that in mind when you're thinking about what am I trading. The other scenario that we have here, and I want to talk about the trap trades for a second, okay? And then it's 8:22. I'm going to jump over to the overnight chart so we can see what those look like, okay? The trap trades can look interesting from both directions, right? So we have Globex high at 84, right? If we make let's say we open up, we get above 1784, perhaps into the 1788, then we reject down and we close in and below the white zone and we hold in this area, I would assume that either that was short covering that drove it up or late buyers chased in and would now be trapped. And that would generally take us to the other end of the range if we got this, which at this point I would consider the Globex lows the other end of the range, which would push us down to 1775.50. The other side of that the other side of that coin is we come below gap fill, we get below Globex lows, right? Perhaps either into the 71, 73 zone, or we push down into 66, 68, which is initial support, where I would expect responsive buyers the first time in. If we get that and we can close back above Globex lows, that would probably be a scenario in the afternoon. I would expect just the opposite reaction, where we could actually push all the way up to the 1784 if we close above that Globex low of 1775.50. So those are the trap trade scenarios. And what I'm looking for specifically is I would like a rotation higher. I may take the micro white zone at 1784, looking for a short, depending on the price action out of the gate. Or I'm looking for a short with a good, depending on how far we come up from underneath, a short here. And I will definitely be taking a short the first time into the white zone if we can get up there. On the downside, where I'm looking for a great trade location to get long, these are the areas that I would prefer to get long in. So Globex low, the first time in, again, depending on range extension from the open. If we open at 1779 and we trade into Globex lows, it would be a very aggressive trade. There's not enough of a rotation. However, if we open at 1779 and we can push down into the 1771 area, I will probably take a long, unless I see something pretty scary the first time into the zone, for a 2-point rotation at least, and perhaps a backside test of Globex lows, and then the possibility exists for, again, that trap trade, right? And I will certainly take a test the first time into initial support to the long side. Where exactly within the zone will be determined by the rotation size. So those are my reactions if we have upside and we have downside. What I won't be doing out of the gate is I don't want to guess which direction they're going to take this in because I have no idea, and I don't want to get whipsawed, and there's going to be a lot of emotion out of the gate. We're 5 minutes till, so I'm going to jump over real quick and look at what the tick charts look like here real quick. And let's trash this. And let's turn this into a 250 tick. And give it just a second. And I may run just a hair over, just so you know, into the open. I'm just not in a rush. I'd rather be prepared. and not be right at the second if you have to drop off. I totally understand. So the first thing I see from yesterday is we have this solid downtrend line going here that looks something like this. Once it'll straighten up, and that channel, the bottom of that channel, looks like something like this right here. Not perfect, and I'll redraw it and post it here shortly, right? So that's on the 24-hour, and if we scrunch that up quite a bit, right? Pull that in. I see the problem. Okay. So if this on the larger picture, right? The larger down, I give it over, and I don't want to burn time adjusting the chart right here. Again, I was having difficulties this morning. The predominant trend line that I see here is that one right there. Okay, and my guess is at some point we're going to backside test this particular downtrend line, which would put us somewhere today in the upper 80s if we're going to test that. I'm not sure that we will test it today, but I'll have my eyes on it. The other one that I see that's predominant in this is this one right here. And it'll be interesting to see if we can get above it off the open. Let's look at this at the same thing on the day time frame, right? If you look just on the day time frame, it is not cooperating. I'm about to kill TradeStation. I would have this on my screen. Is this downtrend line right here, and I'm going to show it to you. This one right here. Okay, and then, well, let's trash this for a second. This one right here. And then this one, excuse me, this one like right here, if it'll straighten up. Those are the two trend lines I'd have on today's chart from the daily carrying it over, right? And first, we obviously need to get above this trend line, but then the big test is going to be getting above this trend line right here, and I would expect rejection. It could trade a little bit over it, right? Kind of do this and then come back down, but I would expect us to reject when we get into this trend line. A lot of people are watching that trend line this morning. If we look at NQ real quick, and we've got 1 minute left, let's take a look really fast and see how that's developing here in the pre-market. Okay, and the last thing I want to mention, guys, I know I'm taking quite a bit of time here. The last thing I want to mention is look for the tick divergences. They'll be pretty easy to spot. Okay, so we can see the morning on NQ clearly this level right here. We're going to have to get above this 34.75. This is on the December contract, right? It's going to be critical that we get above and hold here. And then obviously on the downside, the 34.65. Right, below or above. And actually, if we'll look at how this has been trading, see how whippy this is, it's likely to be pretty choppy in here out of the gate. And I'll probably prefer to take trades away, like up here at 34.90. That 34.88 to 34.90 has been key. Both times on the downside, we rejected out of that, back up. I would expect to reject down to the downside when we got up here. And then looking to the downside, right? Because of the range extension we had, I would start looking at 34, let's call it 34.45 to 34.35 for a possible counter rotation this morning. And that's it. The market's open, guys. I hope everyone has a great day. Remember the three things. Tick divergence gives you extra assistance in determining whether you can take a trade at the zone. Trade at the zone. No one trade matters. No one day matters, right? Respect your stops, okay? And remember, you don't have to be trading the first couple of minutes to make money. There was plenty of opportunities through the course of the day. Wait for your setup and let the market come to you. Don't get anxious, The way we avoid doing that is by paying attention to the size of the rotation, right? And then also, you should have a written trade plan. Follow your written trade plan. At the end of the day, they should look identical. Anyways, this is Simon. I hope everyone has a great day. We'll talk to y'all soon. Hit me on Skype, Twitter, or StockTwits if you have any questions.